Hey there, welcome back to the F&A series. I know you have often pondered about how to differentiate a receivable from a contract asset. Ponder no longer, because by the end of this video, you would have one less challenge to worry about. Today, we're having a look at how to differentiate receivables from contract assets under IFRS 15 and ASC 606 with ease. First, let's explain what each term means. A receivable is pretty simple. It's money a customer owes you for goods or services you've already provided. It's basically money you're waiting to receive. Now, a contract asset is a bit different. Under IFRS 15 and ASC 606, a contract asset happens when you've done some of the work in a contract, but you haven't yet met all the requirements to send the customer an invoice. Think of it as work that's been done, but you can't bill for it just yet. It's still an asset because you're entitled to payment for it, but it's not quite a receivable. So, what's the key difference? Receivables are unconditional rights to payment, meaning you've done your bit, sent the invoice, and now you're just waiting for the money. Contract assets, however, are conditional rights. You've done some work, but there are still conditions or parts of the contract you need to fulfill before you can invoice the customer. Let's look at a real-world example. Imagine you're an IT company in Lagos. You've agreed to build a software application for a client over 6 months. You've worked for 3 months and met certain targets, but you can only invoice them when the entire project is finished. The work you've done so far would be recorded as a contract asset because you haven't yet met the conditions to bill the client. When the project is finished and you send the invoice, it then becomes a receivable. Under IFRS 15 and ASC 606, it's really important to know the difference between these two because it affects how you record your income. For receivables, income is already recorded because you've completed the work. For contract assets, income is recorded gradually as you complete different parts of the contract. Why is this important? Well, accurate financial reporting is essential for anyone invested in the company to make good decisions. Getting these wrong can lead to confusion about how well a company is doing financially. For accountants, it's vital to make sure these are correctly identified and recorded to follow the IFRS 15 and ASC 606 rules. To sum up, remember this. Receivables are for completed and invoiced work, with unconditional rights to be paid. Contract assets are for work in progress, with conditional rights to be paid. Both are essential for understanding and reporting income correctly. Thanks for watching. If you found this helpful, give this video a thumbs up and subscribe to the F&A series for more accounting, auditing, and finance tips. See you in the next video.